Welcome back to the fortnightly wrap-up, tune-up and get-up discussion with my friend and your friend, Tony Locantro from Alto Capital, the man with all the answers most of the time. Tony Locantro, good to see you, my friend.
Always fantastic to catch up, Kerry. The response to these interviews has been fantastic.
Well, that's because you're fantastic, Tony, and you've always got something to say. And more importantly, you've been in the market for over 20 years. You know the market. You get frustrated with your clients sometimes because, why? They don't listen. And we've had, since the pandemic, well, I guess since the low, the low in March last year where it pulled back about 35%, it's been on fire. However, since I last spoke to you, it seems to have softened a little bit. The highs and the lows have flattened out a little bit. Poor old gold is suffering as a result. I know you never like to talk about it, but I'm going to say it anyway. Bitcoin has taken the fire and the wind and everything else. And it's just getting very interesting. People are saving a lot in Australia at the moment. We're finding that people's savings are going through the roof, I guess because they can't travel anywhere. And a lot of people are putting money in the markets, but will they get burnt? Now it's softening down a little bit.
It's getting a little bit dangerous now. What I'm seeing is the speculative fervor that saw a lot of stocks just go absolutely ballistic is starting to come off. And I think we're going through what I call is the boredom phase or the deep regret phase. It's where someone will buy a quality company and it doesn't do anything for a month. And we see the share price come off, but they start to get bored. And it aligns with the deep regret phase is where speculators will sell their best tickets to make a lot of money now simply out of boredom, and they're not getting that adrenaline rush from the market that they were before. So I think I told a client today to take up golf or take up another hobby because you pay me bugger all to sit here and watch your stocks all day. So I'm seeing some of these market depths now look absolutely horrible. One of my favourite biotechs today, Chimeric, looked spent there around 27, 28. It closed over 30. But again, that is just sheer boredom. And I'm starting to see it in my quality emerging gold companies as well. So I know it's hard for my clients to buy on the back foot, but I just keep reiterating, Kerry, is that you need share price weakness to build holdings that when some of our stocks are running like a Kenyan, my clients actually run out of stock to sell. And they get down to 100,000 shares or 1 million shares, and it's like going to buy a pack of Chewy with a $100 note if anyone still carries a $100 note. So this is the phase for my clients where we're setting up to build on what we've already built on. And that it's been a huge run. Some of my brave clients that just keep rolling in the winds. And now I'm saying, look, take a step back, get yourself some BBUS,
right,
and let's go again. You just can't keep punting. It's like trying to drive a car without brakes or without a car without reverse. At some point, you just got to think about how much money do you actually need. I've made that comment before.
You have.
Someone that's made a couple of $1 million said, well, what am I going to spend the money on? Hey, first things first, let's protect it and we can still swing hard. So this is where, look, we might even get some further weakness, but to me, I welcome the weakness because I stand by the fundamentals of our companies.
Is it weakness, Tony, or is it just an inevitable flattening of the volatility? Because, there were days there where the market was, high and then low and, big swings, which made people excited because it's the psychology of the market. Quite often people don't look at the company itself. They're just looking at the share price. They're not looking long-term. They're looking at weekly, which quite frankly is not necessarily the best way to invest. Would you agree?
Certainly. I ran a client webinar last week where I put 2 pictures up, and one was a campfire where they were sitting around the fire with an acoustic guitar and everyone was happy. And then the next photo, they're throwing bicycles and rioting around the campfire. So the campfire is the constant of the company that are there building the story for the longer term, and it all depends on the mood of the people around the campfire. And what we're seeing is such a lot of trading groups, Facebook, Twitter, forums, and once people start to break ranks, you learn fairly quickly there's no friends when it comes to money, and these stocks will start to come off. You'll start to see people blaming each other. The so-called influencers will disappear, and then you just got a crappy market. And I'm seeing that now, is that it's like any market, it gets exhausted, but when people have punted absolute rubbish to stupid valuations, they're going to get burnt. And they say quick buck artists come and go in bull markets, but the steady players make it through the bear markets. And that's one of the classic lines from Wall Street. And it's so true. So, you know, I found my formula. It's like AC/DC, right? Putting out a new album. It doesn't change. It's like a Wiggles song. It's cooking a basic meal. I just stick to it and I plow through all this rubbish. My new client business has just gone ballistic. I'm getting lots of referrals and everyone wants to get on board. But my recent additions are struggling because the prices aren't moving, and I'm starting to get calls from people saying, well, I'm going backwards at the moment. Why would I give you more money? And
Oh, wow.
yeah, but it's only small amounts. But what I've learned in 23 years of advising is the psychology of people.
Yeah.
Fear, greed, and stupidity, where human stupidity is pretty much infinite. So, look, it's at the moment, I'll be doing a lot of hand holding. I'm still going to go out there and target stocks. This is where we can pick up volume in good companies. And the key is that every correction I've been through has been an opportunity. And
100%, Tony, 100%. Yeah. And I think this is a really important, and isn't it interesting? You and I, whenever we start these conversations, we never know where they're going to go. But then we end up coming up with something which actually is really important. And I think that the psychology of investing, and it doesn't matter. I mean, it goes back to the old Warren Buffett saying, you know, be greedy when others are fearful and fearful when others are greedy. And people have been very greedy recently. And that's the time when you had to say, you know what, be very careful what's going on. And quite frankly, you know, at the property market, I know that's not your specialty, but it's going insane. And I'm looking at it thinking, there's going to be people that will hurt in the long term, but it's the psychology of investing. And if you look back, as you said, you know, you and I have both been through a number of market corrections, and that's when you can make very, very, very good decisions without getting hysterical about it. Because if the fundamentals of a company are still there, nothing has changed. It's just the sentiment and the psychology of the market. Would you agree?
Yeah, well, I have a bit of a saying I made up, that the two most expensive words in history are I do. The three most expensive words in history are I love you. And the four most expensive words in history are this time is different. So I can apply that to anything. I've been married twice. Each marriage, tends to cost you 80% of your wealth. So that's a good tax minimisation strategy. But my point about that is that with any raging bubble, I'm going to quote you on the major housing bubbles in the world, that you lose 70% of your gains. Morgan Kelly, one of the best Irish economists, did the study. So you lose, just say house prices go from $500,000 to $1 million, that's 500,000 gain. You're going to lose $350,000 of that gain. And that's in America, that's in Europe. And I think we have this attitude in Australia that we are different and that we're a global metropolis and everyone wants to live here. But, you know, let's look at it realistically. We're only about 2% of the global stock market capitalisation. So we're pretty much Neville nobodies. So anyone that thinks that this time is different, that house prices or share prices have reached a permanent plateau, are about to get taught one of the nastiest lessons in economic history.
Okay, so if we're about to have a nasty lesson, what advice would you give to people right now? Would you tell them to do the BBUS, which is something that you've been talking about? Would you say get into protection mode and just watch and wait? Or would you say there's some very good, strong companies out there which are trading at discounts to what they really should be trading at?
Well, I think the discounts can become even greater discounts. I went to a function last week for Eagle Mountain, Charlie Bass, great team of people. And this stock was one of the highest quality ASX juniors on the market. And during COVID, you could have bought it at 9 cents. And it's just come off the high 50s, early 60s. So, and this happens with every stock. During that client webinar, I put up the market depths of the like of Red Metal, Adalta, Exofarm, Narada. Now, these stocks to enter looked as attractive as Manly Beach with a brown tinge. But sometimes you've just got to go in, you've got to back the fundamentals. But when stocks are falling, you cannot sell anything to buy the opportunities. And my theory on BBUS is it's now 17% of my total portfolio.
Wow.
Total wealth, because when the S&P falls, and as sure as shit, it will, I'm then left with a massive shopping budget to go in and buy underpriced assets. Now, if the US market miraculously holds on another year, I'll make a shit ton of money on my picks anyway. So I think I've covered the bets without going too defensive.
So what you're saying is you hedge, because I often say to people, hedge and diversify, which is, I guess, what you're doing by saying that if the S&P falls, is that right, with the BBUS? Is that correct?
Yeah. For every 1% the S&P falls, it increases between 2.25% and 2.75%. And a client said to me today, that's not like you, Locantro. What are you doing? And I said, well, I haven't worked this hard to watch a 10 to 20% correction take a serious haircut off my net wealth. I want to be in a position to go in and buy the stocks I've identified for cents in the dollar and then ride the recovery, because the way I see things is the sentiment in the stock market, I think, is going to stay. I think you're going to have falls on the index, but there's still going to be a lot of interest in the stock market, because as far as I'm concerned, everyone's gone out and bought stuff they don't need, record retail sales. You know, I'd hate to be doing a curbside cleanup in 2 years, because it's going to be a lot of pedestal fans. There's going to be a lot of printers, treadmills out on the street. And people aren't thinking, they're going out and blowing their money. And used car prices have gone through the roof. I mean, I went and sold 2 cars to buy some quality biotech companies. I just put the lot in, and I'm thinking, people, here's your chance to buy yourself a bit of financial freedom. Don't go out and pay $1.5 million for a knockdown in East Broken Hill when you can live your life comfortably. I just think that where this home ownership, this you must do this, you must do that, is so far entrenched in our society that when it changes, look out below. And I'm seeing the same opportunities in a lot of the financial stocks that have had a great recovery. Now's the time to say, it's done this. Look, take the money out, go defensive, even look at precious metals, or do what I've done and get yourself some protection against the US. You could even bet against Australia on the BBUS. I think the US economy has a greater chance of decaying first, because really our economy underlying seems relatively strong. But my argument is, Terry, how the hell are rates 0.10% when the long-term RBA cash rate, this is the cash rate, is around 6%, and the average mortgage rate long-term is over 9%. So I don't think rates are going to be lower for longer. I think it's like trying to hold a massive beach ball down in a pool, and sentiment can turn very quickly.
Oh, I agree with you, Tony, and I've seen it happen before where you literally go to sleep one day, people wake up the next day and go, what happened? Kind of like the pandemic. Well, what happened? What happened to 2020? And you mentioned just a moment ago that you quite like the precious metals. I mean, poor old gold. Everybody knows me. I'm the gold nerd. I'm the gold lady. And I'm even wearing my gold shirt today. It is soft, getting softer. Thoughts on that, Tony?
Well, I think I threw out trying to forecast the price of gold about 18 years ago because I was getting it too right. Mind you, it's in the $400 range. But 1690 now, 2,200 Australian. That's had a nasty slide from 2728.
Yeah.
So our gold companies are still spitting money, but the money flow out of the majors has gone back into the financials. So we've seen that move out of the major gold stocks, but I think that money can find its way back in. So I don't play the price of gold. I play the fundamentals of the company because the best growth stocks in the gold market have come at a price weakness where the majors will get rid of non-core assets. So play the company first, worry about commodity prices after, because if you throw everything in, there's always something to worry about and you'll never buy a thing. So, outside of precious metals, I'm looking at the longer term impact of COVID on the health of people. And interestingly, my partner is from Eastern Europe, where around 5% of that population have COVID, and some people actually are not recovering that quickly. So I just think the impact on respiratory diseases, lungs, the functions of the human body and nerves, I think that's going to be an ongoing theme.
I think that's absolutely right, Tony. And I saw something the other day just on the news, and I think it was Exofarm, and you'll probably correct me if I'm wrong, where they're using exosomes, and it was to do with COVID long-term effects, etc. Was that correct?
Yeah, most interesting story, Kerry, but I should disclose to viewers of this program that I helped float that company from the bottom up. So,
wow.
yeah, it's the biggest investment of my 23-year career. I own a lot of stock. My clients own a lot of stock, and it's done remarkably well. So I'm not going to push people into that. Whereas when it breaks, obviously, if you hold all the stock, you're going to be a net seller. And I don't think that's ethically right as well. But,
no, I agree.
Yeah, it's certainly been the biggest win of my career. And that story on exosomes delivering these drugs, I think it's going to be extremely important with health and how they tackle the pandemic and the impact of COVID. But yeah, it was a great news story. I was quite surprised to see it. So, I mean, people, if they look at my pinned tweet, if they've followed me for long enough, they'll know that I was backing it from the bottom.
Yeah, and speaking backing things from the bottom, Tony, it would be remiss of me today not to talk about this. Joe Biden's in the White House. Stimulus checks are going, or as George Gavin likes to say, the stimmy checks are flying out the door. He's all about renewables. He's all about, and recently what he was saying was that the uranium supply shortage could potentially drive up prices, was what people are saying, is because they've been sidelined by government for years. People are worried about the dangers of the atomic bomb and radioactive disasters, but it's actually getting a lot more attention now because of the low emissions and all that sort of stuff. And Joe Biden in the White House, he's now going back into that sort of climate agreement. And, that's nuclear reduces greenhouse gas emissions. And, it's interesting. So what are your thoughts on uranium and some of these uranium companies that are out there? And do you think that that could be quite an interesting sector in the near future?
I think certainly we're due for another green climate bubble. Rick Rule, who fiercely recommends uranium, I think he's one of the smartest speculators in the planet.
Yeah.
And I've got a lot of time for Rick, and viewers would be amiss not to go and watch Rick speak because he oozes common sense. So look, I have believed in uranium. I told my clients to buy Marinica, MEY, and I also put my clients into Bannerman because the liquidity in Bannerman is to die for, and you can change your mind 10 times a day. So both of those stocks have done well, but we're nowhere near the 2005, 2006 inferno that was the uranium sector, where we had a handful of uranium companies, and that quickly morphed into a couple of hundred.
Yeah, it was 187, I think, at one stage.
But that's crazy, because in every bubble, you have a handful of companies that actually work, and everything else only delivers brokerage and broken dreams. So look, the biggest risk to a uranium project is actually trying to mine the friggin' stuff. So you're best to have a uranium company that has the resources. You can do the maths, you can look at the in-ground value, and that will run on that. But no, just don't try and build a uranium mine. We've got the majors, the set producers such as Cameco to do that. But in saying that, Kerry, a green bubble, I remember the last geothermal bubble in 2006. We've tried to have wind bubbles, solar bubbles. The EV bubbles probably got a little bit more sustained action. But this sector will tear up a lot of money. But we're also seeing companies starting to move towards that. They're moving towards hydrogen. They're moving towards, we're going to have all these little bubbles happening. But I just think that speculators and people that watch this program have to be mindful that a lot of money is going to be lost. But, kudos to Biden with what he's doing. And I think certainly if you watch, going slightly off topic, if you watch what David Attenborough put out, it's pretty scary shit. And I think the trend now will be, we're going to lead next. We're going to have to have less population, so the birth rate has to drop to make things sustainable. But I'm all for the green sector. I'm all for uranium. And more importantly, Kerry, I'm all for buying low and selling high.
You know what? That's the best thing ever, isn't it? Buy low, sell high. Don't be afraid to sell. If you're a client of Tony's and he says, time to sell, listen to him, ladies and gentlemen. That's why you pay him the big bucks. Actually, it's the small bucks, but you know what? He does a great job. Any final thoughts before we wrap up our fortnight? I love chatting to you. There's so much information. One last thing before you do the wrap up. Copper price. Sure. Now, Eagle Mountain is copper. Do you think the copper price is going to stay strong regardless of the market, or do you think that's run a bit too hard?
I think short term, it's definitely run a bit too hard. You might have a lot of trading action in it, but the upside with copper is a lot of it now is 4,000 metres above sea level in South America, and it's under 1%. So the EV theme, you'll see BHP advertising that electric vehicles need a lot of copper. So I think it's probably run too hard, but there is a lack of copper opportunities on the ASX. But if you're with the right diversified explorer, it doesn't matter what they find as long as it's a big discovery. So that's why I stick with the explorers. But, the copper sector has gone nuts.
Yeah. Final comments from today, Mr. Tony Locantro, before we wrap this up.
Well, I'd like to say to people, focus on buying low, selling high, trying to get to the point where you're financially free, and don't become a conspiracy theorist, and don't be the type of person that writes copious amounts of letters to the editor of your local paper. Life's too short for that shit. Just focus on what you can control. Don't get into these. Who cares about Harry and Meghan and Oprah? The world's just full of useless rubbish we don't need. Stay focused. There's lots of opportunities out there to make money, and don't be a doofus.
You know what? You couldn't have said it better, because I often say to people, be resourceful, get educated by listening to people like Tony, stop watching Netflix, and definitely stop reading and watching stuff about, was it Meghan and Harry? Seriously? Not interested.
I must say, I am enjoying this series of Married at First Sight, and people are welcome to bag me in the comments section of this video, but I need to escape I'm coming up to a midlife crisis, so I'm not going to buy a Lamborghini or Ferrari. I like to watch junk TV and just enjoy.
Do you know what, Tony? Here's a little secret. I don't watch it every time, but every now and again when I just need to just stop my brain, the only thing I've seen is Married at First Sight.
Well, we've got something in common, Kerry, and I just love those interviews, and I hopefully viewers have again learned something about me they probably find disgusting.
Absolutely, Tony. And ladies and gentlemen, if you want to find out what's happening in the ASX small caps sector, go and read all of the articles on smallcaps.com.au, because that's where you're going to find all the information under one roof. Tony Locantro, I will see you back here on the small caps video in 2 weeks' time. Until then.
Look forward to it. See you, Kerry.
Cheers, Tony.